Hi, and welcome back. Today we're going to talk about growing your money tax-free and some of the ways to do that. As you know from the last video, you can grow your money in Roth IRAs, bonds, and maximum funded life insurance. Real quickly, let's talk about bonds. A general rule of thumb for bonds is when interest rates go up, bonds go down. Currently, today, 2012, interest rates are the lowest possible point they could get. So therefore, they only have one direction to go. That's up. It may not be a time that you want to be putting your money in bonds. Maximum funded life insurance. We're going to talk a lot about this in the future in the videos to come. Suffice it to say, this is a fantastic way to grow your money if it's not stuck in qualified funds. Roth IRAs. There's two ways to get our monies to Roth IRAs, but first let's discuss the difference between Roth IRAs and IRAs. IRA, individual retirement account, allows you to put $5,000 a year inside of an individual retirement account if you're under the age of 50, and $6,000 a year or a $1,000 catch-up if you're over the age of 50. A Roth IRA is the same. However, you may be phased out. You can still put in $5,000 under 50 and $6,000 over 50, but if you make too much money, your adjusted gross income is too high, you may not be allowed to contribute. The major difference between an IRA and a Roth IRA is in an IRA, you cannot touch the money prior to 59 and a half without paying a 10% penalty. With a Roth IRA, you can touch the principal prior to 59 and a half, but you cannot touch the growth without paying a 10% penalty before 59 and a half or 5 years, whichever is longer when it comes to contributions. However, there's a second way to get your money to a Roth IRA. You can do what's called a conversion. If you have your money inside of IRAs, 401ks, 403bs, any other tax qualified account, you can take that money and you can convert it over to a Roth IRA. There is an exception to this rule. You cannot convert a non-qualified annuity to a Roth IRA. It must be a tax-deferred qualified plan with the government. When you make this conversion, you're going to be required to pay the taxes. So let's use a $100,000 IRA as an example, and let's use a 30% state and fed tax rate. That may not be the same for you, but for right now, to make the mathematics simple, we'll leave it at 30%. So if we have a $100,000 IRA and we pay the taxes out of it, that's $30,000. Our net result would be $70,000 inside of our Roth IRA. If you were under 59 and a half, you would also have to pay a 10% penalty on the $30,000 you removed, so you'd pay a $3,333 penalty, and your net result would be $66,666 inside of your Roth IRA. But there's a better way. If you have money sitting in your tax-as-you-go environment, such as CDs, savings accounts, so on and so forth, you can use that money to pay the taxes. So we take the $30,000, we pay the taxes, we move the entire $100,000 to the Roth IRA, virtually making a $30,000 contribution to our Roth IRA, and we still, if we're qualified, are allowed to contribute our $5,000 or $6,000 into our Roth IRA for the year. However, I recommend you don't mix contributions and conversion funds in the same account, because converted funds have special rules. The first rule is this: when the money is converted, if you're under 59 and a half, you are not allowed to touch the principal or the growth until you hit 59 and a half or 5 years, whichever is longer. If you are over 59 and a half, you can touch the principal, but you cannot touch the growth for at least 5 years, so you need to be able to track those funds. This is how you do a Roth conversion, and just some of the ways that it can be done and the rules with regards to doing it. If you want to know more about how to handle your qualified money and how to get your money into a tax-free environment, growing it the safest possible ways, call us, set an appointment, and come in and we'll show you how to make your retirement tax-free and predictable. I look forward to meeting each and every one of you in the near future. Keep smiling and have a great day.